Hello, how are you doing? Welcome along to our FTUK daily live stream for Wednesday, the 30th of October 2024. This is our US preview. US markets are about to open and it has been a busy session in Europe. It just feels like with the preparation for the UK budget, it feels like there's an awful lot that has been going on. It is busy. The budget is going on as we speak, and I'm sure that obviously you can see on your screens that sterling is not really enjoying it so far. It appears that Rachel Reeves has changed the fiscal ruling of how the goalposts are going to move in terms of how things are allocated in terms of what they can spend. Yeah, but I have to admit, just looking at it out of the corner of my eye, it's not quite as volatile as I thought it potentially would have been. So that in itself, I suppose, means we've got quite a contained sterling market. And yeah, for me, I reckon maybe this is a buy the dip territory type situation. I'm hoping it, but I'm talking my own book because I am bullish overall on sterling, but things could get worse from here. We did a full breakdown of this in the London stream this morning, so if you want to head over and check that out. I don't want to look too much at the pound because we've got other things that are important today, primarily those being the ADP employment change, which has come out, and wow, it was a great number, and we got the exact reaction that we were looking for. Same with jolts as well. So let's first up catch up on what's been happening in Europe, then we'll have a look at the ADP and look at the stock market, and then we will move on to a quick preview of the Bank of Japan rate decision tonight, which I think may be interesting given the political uncertainty that we now have in Japan. Right, okay, so in Europe this morning we've had good positive GDP data out for both Europe and Germany. In Europe, that is a surprise to the upside, 0.4% from the forecast 0.2%, and in Germany that has also surprised to the upside as well. We were expecting a negative print minus 0.1, and that has now just slightly positive at 0.2. First bit of quality German data we've had all week, and I think that the inflation data is out now, so we'll keep a check on that one as well. In the United States, though, it's been the ADP employment change number. We obviously had jolts yesterday. We talked about that in great detail, and we got the market reaction that we were looking for. But here's the strange thing with jobs data. We got the exact opposite today from ADP. The prior number was revised up to 159,000. We were looking for 115, but we got an amazing 233,000 new jobs. They are private sector jobs from the automatic data processing company that process all of the payroll slips for private sector companies. Well, not all of them, but a big portion of private industry in the United States. They process the payroll data, so they get all the statistics, and you can see it there on the chart there. Amazing number. Now that has given us a polar opposite to how the jolts were painting out to be, and that's going to make, unfortunately, it's going to make non-farm payrolls a little bit more challenging than you might potentially want it to be. It's nice when everything is in line, but the key point about doing this in our fundamentals week is that the market reaction is exactly the same, and that is the key point. So if we look at the charts now, you'll see, let me just bring up my charts here so everyone can see them. I've got the US stock market here, and we've got exactly the reaction that we wanted. This is on a 15-minute chart from yesterday. We were looking for a dovish reaction, which is stocks up, dollar down. We got it off the jolts, and look at that beautiful move there. Obviously, you get a bit of volatility, but really played out nicely. Now, you'd be looking for a hawkish reaction from such a strong number, and that is giving us a push to the downside. That is stocks down, dollar up, and we got that both in the dollar and also in the stock market. This is the S&P 500. That's where the jolts, the ADP was printed. A little bit of a pause, and now we've started to print to the downside just before the open. Now, what we've had a habit of finding is that these moves to the downside, these hawkish moves to the downside, are relatively short-lived. So unfortunately, you have to approach the end of the week into next week with looking for a dip to buy, unless something happens in the election next week, which really sort of changes things. Now, if I just go up to a 1 hour, this is what I've been saying all week so far. It's very clear for me. There's such a wall of buying of new contracts coming in to support. This is the obviously thinking about it from the E-mini S&P 500 futures contracts position. There's a lot of skin in the game in these areas here. That's all the way down to 5,680. So even though we're just starting to push to the downside, you're going to take some serious volume to get through there. I can't see that at the moment. It's not to say that it couldn't happen, but I just can't see it. So not at the moment. So let's see how this goes over the course of the next few hours and then into non-farm payrolls. But the key point is that the market is reacting to how the market should react given the jobs data as it's been coming out. That's a positive. It makes trying to figure out what a non-farm payrolls as a number is going to be, it makes that a little bit more challenging because we've got one that's slightly lower and one that's slightly higher. So it's not too easy to sort of predict. There's no clear trend there. But the market reactions have been the same. If you look at the dollar as well, look at the dollar, you can see here we have had a nice, this is on a 1 hour, we've had a nice push, a nice strengthening move in the dollar on the dollar index there over the past hour. And there you can see it against the Japanese yen, that yen weakening off quite nicely. And this is on a 1 hour, and we've got top to toe on that one. We've got a nice from the ADP, we've got a nice 71 pips so far. So yeah, fundamentals connecting beautifully with the price action. We see exactly how, as a trader, you should be using them. That's it. That's all you need to take from that. We are now fully prepped, fully understand how the market is reacting to jobs data. We know the ranges. We know what the reaction is being like. It's not been too complicated, and we can take that now as a framework when we build into non-farm payrolls on Friday. That is the preparation and the job of a trader that is using fundamentals in a way that you can actually use in a way that is positive for you as a trader. It's so important. Good, right? Brilliant. Really strong. Good fundamentals this week so far. It's been a very good week in markets so far. It's certainly interesting. Okay, right. Let's move on and let's talk now about the Bank of Japan, because we've got an interest rate decision in Japan. It's what we would describe it is in the overnight session. So that is in the Asia Pacific session. So it's going to be right in the middle of the night here in the UK. So that's into Thursday's very early morning hours here in Europe. But if you're in the States, then obviously it'll be your late evening and you'll be able to get across it. So it's worth covering in preparation for what is coming down the pipe in the next sort of like 8 to 10 hours. Now, no one is expecting any changes in the interest rates from Japan overnight. You know, they are on a very slow path to normalization, but the difference and why we should pay attention to this particular one this time out is because of the political uncertainty that's been created this week with the snap elections at the weekend that did not go the way of the government at the certainly not the way that they wanted it to go. So the Bank of Japan is expected to hold rates. The market is looking to Ueda, he's the governor of the Bank of Japan, to soften the stance, particularly with those post-election comments that he will make as well. The election has fueled uncertainty in Japan. That is the important point. And the ruling coalition losses may impact fiscal policy. Very sensitive in Japan to anything that's happening political. I mean, I suppose it is anywhere in the world, but certainly given the position and the size of the debt and how the stature that Japan has on the world stage, you don't want that. That's not the sort of country that you want political uncertainty in. Now, there's a few things in here that we just need to pay attention to. There's some global factors that would be supportive of interest rates in the in Japan. U.S. jobs gains and also Chinese stimulus ease downside risks. Also, the Japanese recovery as well. Strong wage growth and services sector inflation could prompt some action from the Bank of Japan, but everyone thinks it's highly unlikely. So to a certain degree, the surprise is if the Bank of Japan do act, but that would really give us some volatility. The yen weakness, though, and the inflation concerns, obviously, we've been on a very slow process of moving from an environment of disinflation to inflation in Japan that has slowly started to be there to the point where they just needed to normalize rates. That is going from negative rates just to slightly above positive. We've only got 0.25% in rates in Japan at the moment, so it's not exactly a very high interest rate. But that yen weakness as well has renewed inflationary worries as well, because you start to weaken your currency. That gives you a sense of making everything cheaper, so that obviously then starts to create inflation. Then recent CPI slowdown is due to the temporary factors that could rebound in the Japanese economy. So what does everybody think about what is going to happen in Japan? Do we think we're going to get a move from the Bank of Japan today? Well, basically, no. It should be a no-brainer, but that doesn't mean to say that we should not be fully prepared for it. I've managed to just get together some of the big banks, their view on it, and as you can see, from Citibank down to Goldman Sachs and JP Morgan, Bank of America and Barclays, nobody is expecting a change, so a surprise could be a hike from here. I can't think that they're going to go with the political uncertainty that's been created this week with a cut. I can't see what that happening. I don't think we've had long enough yet before that kind of a move, so I suspect that they will stay firm with a no change situation. So tomorrow morning I'm fully expecting to wake up and see that rates in Japan are still 0.25%. But we will see. Gosh, right, that's it. So let's have a quick look at the yen. We were looking at it briefly before, and you can see it there in front of you there. Let's just put this onto a daily. Like we said with, you've always got to have that intervention risk radar in your mind when you're thinking about the Japanese yen. But look at these, look at the way that these daily candles have started to paint themselves out. That's real indecision in these doji structures. Certainly 2-3 in a row, something like that. That's starting to look a little bit compressed from me. I think, honestly, with the strength of the dollar, I think you've got to be looking at a stronger dollar-yen rate as the yen starts to weaken. But then again, we start to keep moving. You can see from a trajectory point of view over the last few weeks, if I just paint that in there, you see, we are moving. We are moving consistently high. We've not taken out the week's high at the moment. You start to do that today, and then tomorrow into non-farm payrolls. You end the week up around these 154, mid 154 areas. Intervention starts to look a little bit more likely. You've got to get over these hurdles, though. Let's just draw those in there so everyone can see it. These nice clear dojis in this area of resistance that's formed. We're just testing it nicely, as you can see here on the daily. Get that one in as well. So you've got some levels to bounce and play off. I wouldn't want to be shorting this market, though, too aggressively, given the strength of the trend. But if the Bank of Japan come and decide, if the Japanese government decide to come in, step into the markets and start to reprice the yen, that would move this market to the downside very, very quickly, and they would knock it certainly back down to the bottom of this range. I can't see how they would not want to move it all the way back down to 145, just to sort of reposition it into a better spot for the election. You see, because if you get the election that comes out next week, and then we do get a stronger dollar from that, this is going to move. It's going to shift. So we could have an election, and then we could have an intervention. These things that you've always got to think of as many scenarios as you possibly can and be prepared. That is the whole point of trying to get ahead of the market with all of the fundamentals. So there we go. It's been a good week so far in the markets. It's been very enjoyable, and we've had some good feedback on the fundamentals. And obviously, we have got the whole week is sponsored by Newsquawk. You head over to the website, use that coupon code as well, News35, and you'll get a Squawk free version of the Squawk for 14 days free trial, plus 35% off your 1- and 2-step evaluations, and the news add-on thrown in there as well. But also as well, we've got Halloween stuff going on tomorrow. You might have seen that on all the social media channels. Plus as well, we now start to count down to non-farm payrolls, which is sponsored by Newsquawk and the Trusted Prop. We've got an amazing giveaway this week for non-farm payrolls, which we'll announce after the live stream. We're giving away 3 2-step evaluation accounts and 3 3-month subscriptions to Newsquawk services. So it's an absolutely outstanding deal. Get a free account and a professional audio squawk as well. So all you need to do is head over to Twitter, get hold of that tweet that we've got on the channel, follow the rules, do the reposting and the following and that type of thing, and fill in the form with what you think the non-farm payrolls is going to be. It's definitely going to be a very, very interesting end to the week. I can't wait to sort of see how things develop from here. But that's it. That's everything we've got. So enjoy the session ahead if you are trading, and we will see you bright and early tomorrow morning.